Hi, my name is Joe Nielsen, and I am the real estate professor, baby! Yes, sir, I have something hot for you today. I am in the process of trying to refinance my properties to lower my principal and interest payment significantly. I'm talking $150 a month I can deduct from that payment by getting better financing. I call it Refi Madness. And how do you do that? Well, first, you got to have a good credit score. So if you don't have a good credit score over 700, then you've got to go in and you've got to print out your credit report. Print it out and take every negative and dispute by written document, registered mail, to the credit bureau with a CC to the Consumer Protection Agency and the Banking Commission. Get them on notice that you're not taking it. If you don't have success there, you can even go so far as to going and filing in district court against the company for that particular bad credit report that they have given you. I've done them both. My current credit is pristine. I have no negatives with a lot of mortgages. That's tough to do, but I've eliminated a lot of negatives. So you can do that too. I also give the bank my 1040s for the last couple of years that show good cash flow. I have a global spreadsheet of all my properties with more information than the bank could possibly utilize. But that shows I'm on top of it. It shows I'm organized. And then I have a spreadsheet of just those properties or property that I wish to refinance. And with that, I have the lease of the current tenant in the property that I wish to refinance. Now, I go with this information to local commercial banks who are used to using real estate as collateral for loans. There's many small commercial banks, this is their business, loaning to investors like me. Generally, they give 70%. Right now, you get about 4.5% to 5%, sometimes higher, with 20-year amortization, or as I go for, 25-year amortization, because I'm into cash flow. If there's one thing that has stopped investors from being successful, it's cash flow. Over the long term, they'll be fine, but it's current cash flow. So I'm interested in that. So I'll want 4.5, 25-year amortization, and the banks want a 5-year reset, or as they sometimes call a balloon. That's okay. I don't think interest rates are going up. This is made in 2016, March. Now, if I can't find a local commercial bank, I'm also going to contact national mortgage servicing companies that house my current mortgages. They sometimes will do a HARP loan, which is a government-assisted loan, HARP. And I've gotten 4.75 over 30 years without a reset. Try it if any of your houses are Fannie Mae or Freddie Mac owned. Call it the HARP. You want the HARP. Now, I also have brokers who work for me, and they try to shop my refis. I have one broker who's attempting to refi 14 of my properties. And he wants a point, and the bank wants a point. It's a little expensive, but it depends on the rate and the term, and if they're the only game in town. So with these, with the rate, with the term, with the balloon, you can lower your mortgage by, say, $150 a month, which is $1,800 a year, almost $2,000. If you had been netting $3,000 on that property, and all of a sudden you're netting $4,800, you have increased it by 40%. Wow! Holy mackerel! That's worth the effort. That's worth the time. That's worth it's worth everything to get that number lowered, to increase your gross margin and to increase your net. So the real estate professor believes that you should go out and try to refi your properties. Join me in celebrating Refi Madness! Ah!